All right, welcome to the SMB Forex and Futures weekly analysis. My name is Mark Principato. So in today's segment, we're going to be looking at the S&P Futures or the S&P CFD. That's this chart over here. We're going to be looking at Euro dollar, Pound dollar, and Aussie dollar on the bigger picture. Let's first begin with the S&P. Now the purpose of this analysis is to get a sense of what our possible scenarios are for the week, so we have a better idea of how we should be leaning on our trades and form expectations that are more in line with what the market wants to do. So here is our 8-hour chart on the S&P. Why 8-hour? Because it's just a broad view. Okay, it's a pretty broad view. Now, as we can see, in the previous week, a low was made here. In fact, I was talking about this stuff as it was happening over the week. This bullish engulfing candle started it. We had the higher low over here. Once it closed here, that was it. Okay, this meant here that it's probably on its way up. So when you see stuff like that, and you see this in the currencies all the time, when you see something like this, it means that you need to stop being so bearish and start thinking more bullish. It doesn't mean you take a trade. I need to make that clear. But it does mean that you can start changing your perspective or your outlook. Now, since then, we pushed up, we pulled back. This was overnight, this pullback here. And since then, we pushed above this previous 8-hour high of 1606. Clearly, a new higher low has been established. Technically, this thing should be now reaching for a higher high. So during the week, I would expect this thing to push higher. If instead it does not, and at some point starts to push below this 1599 area, if it closes below that, then most likely we have a lower high in here somewhere, and then we're probably going to go retest the lows at some point during the week. But unless we do that, right now it's positioned to go higher. So how does that affect your trading? Well, you should be thinking that, all right, I should be looking for longs. If you're trying to trade the bigger picture, you can consider your risk using this 1600 level. That's a good 10, 12 points away, which is pretty large. Okay, it's very tough to take a trade on such a larger time frame because the risks are usually very high structurally. But you can adjust your size, or you can wait. You can use your smaller time frames to sort of refine that and find a support level on the way. You know, if there's any retracement in there, small retracement, then perhaps get on board with that. And then if you want to give that bigger picture a chance, again, you know that 1600 level is really your point of reference in terms of risk. If we close below that, the party's over as far as longs. If we don't close below that, then we're holding, and we should be seeing closes above 1620. And if we don't see that, then we're probably range bound. Okay, but if you're long and you see that, you want to try to hold on. Now, one thing I want to point out, and I can go to a smaller picture for this. In fact, what I'll do here is I'll go to a 4-hour chart. One thing I want to point out is this level here, the 1620 level, you can get something called the max fake to the upside there. All right, you have to watch for that. And what that will look like is a push above and then a bearish close. Maybe it's a shooting star or whatever. But if that happens, I'm not saying it will happen, but if that happens on the bigger picture, you get your bearish close and the new candle opens and takes out that 4-hour low or 8-hour low, then that's a bearish sign also. Even though you went above and made a higher high, it doesn't really count as a higher high if you get a bearish close on top of that. It needs to close strong. If it closes weak, then most likely it's a fake out, especially if it comes from the max fake area, which would be up in here somewhere, mid 1620s. So that would also be a bearish signal possibly a short signal for a swing trade, even though you have a higher low here. The thing is, if you take a swing trade like that, you have to understand it's limited because you are facing a higher low. All right, so if it gives you any trouble, again, you have to recognize that it may not give you much. Maybe it'll retest the low. Maybe it'll give you a fake out over here at some point. Who knows? But just be aware of it. I think trades like that too are more appropriate for day trades. I think it's the more conservative thing to do. But if you see the max fake happening on the bigger picture, that may be a good trade to hold for the day or a few hours. Capture some of that bearish momentum and be done with it. So you don't have to worry about, what this higher low may, force on the market, or what the higher low indicates. I shouldn't say force on the market, but what this higher low indicates. Whenever you're shorting in front of a higher low, it's usually a problem. All right, so just keep that in mind. You don't have to be completely closed-minded to shorts, but just understand what it can look like and what it should not look like if you're getting short. Okay, let's take a quick look at the S&P real quick. The Dow, and see how it compares on the bigger picture. Okay, hold on a second. All right, so the Dow looks like the same thing, right? Possible lower highs forming. We have a higher low, but possible lower highs, but it hasn't proven itself yet. So some people may get bearish on this a little too early. They may say, oh, it's a lower high, I'm shorting it. But there's nothing here that says go short just yet. Yeah, we have some tails, but I don't see a bearish close. We certainly don't have a close below this low. So this may just kind of stabilize and then push higher. We don't know yet. We do know that we're facing higher lows. Okay, those are established. So we'll see how the market unfolds today. Tomorrow maybe we'll get a clearer answer. But that's what you need to watch for. Let's take a look at the euro dollar. This is euro dollar on the weekly chart. And as we can see, I'm checking the weekly chart because I want to know what's the most recent activity, right? So we had bearish close 2 weeks ago. We had a bearish close the previous week. We took out the previous week, the low of the week before that, right? That's all this action here. And this is where we are now, currently, right? Which it's been holding this 30 even area. What I'm curious to see this week is, do we close above this previous week's high? That's going to be a very interesting situation. All right, let's go to an 8-hour chart. So as of right now, we're dealing with this bearish momentum. We have lower highs and lower lows. We have a failed low at 30 even so far on the bigger picture. We had an attempt to go up. We had this sharp pullback, which could have turned into a trick, but it never actually didn't turn into our ideal trick. But it's, I guess you could say, sort of one. Variation of one. And we had some bullish closes here. Now this thing is not going crazy to the upside yet, but we do have this possibility here where it may be attempting to reverse or stabilize. So with this situation, again, I would be watching this 30 even or 29.80s, 90s level. I'll be watching this level carefully for smaller time frame tricks, for longs. All right, this thing is giving the possibility. But remember, the key to that is the validation. If it falls through and closes below the 29.80s, if it closes below, you see it close at 29.60 or whatever, then this thing is probably going lower. So I would stop looking for longs at that point. I wouldn't necessarily jump into shorts right away either, but I would stop looking for longs, clearly. All right, so you have to watch for that. Now, if this thing turns into a lower high on this bigger picture, like we have this shooting star-like candle, I would also leave that alone as far as shorts because it's inside of this range. So anything can happen. It could be easily faked out in there. I don't like things like that inside the range for the bigger picture. Smaller picture can be a different story, but the bigger picture, no way. All right, now bigger picture level would be the 31.50 level. So if you're looking for possibilities on the bigger picture, this level would present a good place to look for those max fakes to the short side, just like that S&P scenario I illustrated earlier. The thing is, with this one, Because again, you're facing a higher low situation or a double bottom situation on the bigger picture. Plus, as we zoom out, this formation, if you were attempting to take out these highs, this formation would also confirm a higher low on this broad picture. I would really not be looking for swing trade shorts up there. That's basically a place that's going to signal longs if it breaks above and closes above that level. That's very important. If it does that, that means it's probably gaining strength again. And you should probably be looking for longs at that point and minimize shorts at that point. Now, can you go long before that? Well, like I was saying, you can look for the max fake and see if you get something on the bigger picture. If you get your close above, the thing to do really is to zoom in a bit and look for an entry on a smaller time frame, perhaps on a retest, okay, of that resistance. Something along those lines to get involved in the new bullish momentum if it can prove that it wants to do that. That's why understanding the bigger picture is so important, understanding these signals and what it's implying. Now, of course, you may have some SMB patterns in here, the proprietary patterns. The point of this analysis is I'm not covering those patterns. The point is just to give you some structural ideas that the market may eventually present, and you'll have a sense of what it's implying or what it wants to do. And then you can apply your proprietary patterns on top of that and see if they make sense. Okay, so the pound has been acting actually weaker than the euro. Let's take a look at it on a 4-hour chart. Okay, now the pound, notice the pound does not have that same stabilizing structure that the euro has. The pound is coming off of a lower low. It's trying to come up a bit here, but you see the euro is flatter, right? The euro has spent some time in a range. This has not. Maybe this is what's holding the euro back from breaking resistances. So I would still say the pound is weak. Now, the pound is fooling around. It's still fooling around in a psychological support area, but it has not recovered, and it has not taken out any highs. These are very minor highs here, even on this larger time frame. It really needs to take out 55, or it needs to give us a more significant structure to give us a high that it needs to take out to signal longs. But at the moment, I would say this thing is still weak, okay, on the bigger picture. If you want to try taking a trade on the break of a 4-hour low or something like that, that may give you a possibility. But just keep in mind, if it retests 5150s, okay, or goes slightly below and fails to go much lower and give you bullish candles, then I would be extremely cautious with additional shorts or holding on to a short after that. All right, because that would be a sign of stabilizing, especially if the euro is looking like it's looking right now and the euro breaks out, makes a higher high. If it does something like that and the pound starts to show that sign of stabilizing, then the short party is no longer. So it's very important you understand that point. So it looks like a short right now. Check your volume analysis, check your smaller time frames to validate this. Wait for a break of a low. If you want to work with that, your reference point for risk is 52.45. See what you can do with that. All right. So that's a possibility. This thing may test the low for the week. That's what you're looking for. But if it gives you any other variation, like a trick, it gives you a bullish close, below this 51.60 area, it gives you a max fake. All those things, if any of those things materialize and you see the euro has not made new lows, you have to get off the short bias. You have to get off that idea, because most likely this thing will be changing and you don't want to continue to short something that's going to start to reverse. All right? So we don't have that scenario yet. I just want to tell you I'm just telling you what to look for. As far as right now in the bigger picture, this still looks like a short. So if you're short, or you're looking to get short, you may have some possibilities here. All right, on the bigger picture, with somewhat limited risk. If we close above this high, first of all, this candle needs to close, and I think it closes in like an hour and a half. It needs to close, and then it needs to go lower. If instead it goes higher and starts taking out these highs, especially the 5280s, then that's another sign of that would be negating the bearish argument. All right. It doesn't necessarily mean go long just yet, but it negates the bearish argument. I would hold off at that point and just wait for further information. All right. That's the pound on the bigger picture. Let's take a look at the Aussie dollar on the bigger picture. Here's a 4-hour chart. Now, we've been talking about this structure. We talked about it all week. And we talked about how ugly it looks in terms of longs. Yeah, you had some higher highs and higher lows, but the slope of this structure is not good. Very weak. So look, it made the new low. Barely, but it made a new low. Okay? So this thing may be attempting to stabilize because look, it's already trying to pop back up. I would not really do anything with this thing on the bigger picture. Just, letting you know. I don't like it. There's no stability here. Maybe it's a short, but it could be getting tired. This is not a dramatic new low like this one was, more dramatic. This one is much less dramatic. It just seems to be running out of steam. What I would do with this thing, and I've been saying this already for a number of weeks, what I would do with Aussie dollar is wait for this thing to really show stability. And you know what that means? That means it needs to run back up to this high. It needs to pull back in, maybe retest a low, or it needs to spend a lot of time within this price range. A lot of time means a couple of weeks. Okay? Not a couple of days, a couple of weeks, maybe a month. It needs to spend inside this range. That would at least let us know, hey, you know what? Maybe this thing is tired of going lower. And that would maybe open up some more possibilities for bigger picture longs. Otherwise, I would leave this thing alone on the long side and on the short side. It needs to give us some better structure here. All right. The smaller picture on this thing, is usually, it's a very tough vehicle to trade. Very, very tough instrument because it's very slow intraday. So I think you get most of your value out of this on the bigger picture. So your levels to watch for are the 93.38 area, right, and the 91.05 area. That's your range defined by this structure right now. The question is, do we make dramatic new lows or do we just stay within this range over the next few weeks? That's what I'd watch for. Taking trades in that, if you're looking for Aussie dollar trades, I would basically keep them on the day trading level. No swing trades. Day trading means you're holding it for like the day, and I would work with the extreme prices only. If it's not at an extreme price, I would leave it alone. Anything inside this range is just going to be problematic, in my opinion. All right, that's my outlook on the Aussie. There's really not a whole lot to say about it besides that. Fundamentally, I think it's being driven by stuff that's been going on, here. There's some forces in play. It's also very sensitive to the New Zealand dollar. So you can also watch New Zealand dollar to see how that thing is unfolding. It may give you some additional clues for the Aussie dollar. But overall, I would just hold off on this thing. All right, so I'm going to conclude the SMB Forex and Futures weekly analysis. I hope you found it informative. Remember, this is a holiday week, so take it slow and expect less. I think that's a good conservative policy to go by. So thank you for watching. My name is Mark Principato, and I will see you next week.